Hello again, this is Jeff with the ValhallaVentures.com, ReiguideService.com, ReiguideService.com, and wanted to talk about the markets. And I've had a few people ask me what my thoughts are with the current state of the real estate market and what is going to be happening in the future, what markets are doing, that kind of stuff. So what I basically wanted to do is give a little bit of a history lesson, a little bit of backstory before we get in with the main story of what I think about the markets. I mean, if you just want to skip everything else and say that, the markets do what the markets are going to do. There's ups, there's downs, and that's how there's profit made. I mean, that's really the end of it. But the longer version starts, throughout history, there's been times of easy lending and times of rough lending. And there's different variables and reasons why, back in the 80s, there was a lot of, in the early 80s, there's a lot of guys that were making their money through different means, stock markets and whatnot, and there was a lot of tax advantages to real estate investment versus any other capital gains taxes that you might have to pay. And so there's a lot of money dumped into the market, and when there's a lot of people looking for something, when there's a lot of people trying to buy something to profit off of it, then that inherently means that there's going to be more value, right? Those things are going to cost more if you're going to be able to get your hands on an investment property, and there's a bunch of other people that are trying to get their hands on that investment property. If they're really looking for the capital gains tax advantages, the price really doesn't matter as much. It doesn't necessarily have to cash flow as much because there's some other variables involved. And so then the laws kind of changed a little bit, and we don't need to delve too deep into the specifics. But basically, they changed a lot of the rules in 1986 for real estate investment and taxes. And the reason that they made those changes was, there's still the advantages. You basically could still depreciate property, but instead of 19 years, is like 25 years. And there's just all these different little changes that they made. And so there's still the huge advantages tax-wise for investing in real estate, of course. But what essentially happened is that because of those law changes, that it really slowed down the market quite a bit. And a lot of the banks started calling loans due, interest rates went up, but, whatever. 2005, 2006, 2007, even early part of 2008, I think, it was a happening time. And I had seen it progressively ramping up. People were able to borrow money very easily to buy their own personal real estate. Because if the money's good to be borrowed, or good to be borrowed, if the money's always good to be borrowed. If the money is easy to be borrowed and easy to qualify for, then what tends to happen is that again, it's dumping money into the market. People are borrowing money that they don't necessarily qualify for, getting loans that they shouldn't necessarily be getting, hard money loans that we've talked about before in some other videos. Hard money loans are basically, short-term loans, easy money to get, basically, especially if you have decent credit and you're willing to sign a personal guarantee, because if you have good credit, they know you're going to save your credit. And you're going to pay whatever you got to pay, do what you got to do. Those short-term loans are risky, and they become more prevalent and more popular whenever people don't really necessarily know what they're doing in the real estate investment world. People do use them short-term. It's fine, but getting into something that you don't, a real hard money loan, it has its purpose. It's a short-term loan, but you got to write some conditions in there. What happens if you go over? I don't believe in 90-day, which that was pretty popular back in the 80s, 90-day loans, and then they could renegotiate. I'm more of a 6-month at least on a hard money, and you really got to know what you're doing. But again, if you're buying the property right and you're and you're not overextending yourself with hopes and dreams and wishes, but really just bare bones facts of what properties are selling for in that area. If there's an emergency parachute on it, can you just bail and sell it for uber cheap and still make a little bit of money and pay off everything and breaking even? Because to me, that's the bigger concern, is not when people are borrowing money, not necessarily when people are doing these short-term loans, but whenever they don't really have all the information they could have to protect themselves, and then on top of everything else, they're doing these short-term, high-interest rate loans that could call loans due. There's just a lot of different elements to investing in real estate, and I think that the markets, the money that is available is, you can see the stock market, which I'm not going to get into, but you can see the stock market's volatility going, extreme swings up and down. I don't really know enough about the stock market to tell you what that means. I'm definitely not going to give advice out of my wheelhouse. And my wheelhouse is just the real estate part of it. But I'll tell you that if there's volatility in the stock market, then I would assume that there's going to be people looking for a way to do something with a more secure asset. And the most secure asset you can have is real estate, as long as it's something that's cash flowing, something that is not necessarily a luxury item. I know that a lot of the commercial real estate, office space, retail space, I know a lot of that slowed down in 2008, 2009. But that's also because the money wasn't as easy to borrow for people wanting to start new businesses. The banks were just really tightening up on what they were loaning out. And so that makes it harder to fill up these retail spaces. I do notice that the retail spaces are really, really kicking off. New home developments all over the place. I still don't think that it's as easy to buy now as it was in 2005, 2006, 2007, and 8. Early part of 8. But I think that as long as you are buying based off of facts, buying off of real numbers, you're not putting yourself into risky loan situations, then you're doing good. And for the smaller buyers, that are flipping houses and whatnot, that's fine. For the large, you just don't buy more than you can get out of, and you have yourself a parachute plan. If you think you're going to get 220,000, but you're going to make 40,000, be willing, if the market seems like it's going to take a dump, then be willing to take $15,000 off the price if that's an offer you get. I see too many people hold on to properties for 6 months with $3,000 a month payments, and they could have just taken 15 grand off. It's one of their first offers. So don't be greedy. Determined is fine, greedy is not. But I think that if you're buying properties that are, dependent on luxury, I think you got to be really careful. Apartment complexes are a pretty safe bet most of the time. Storage facilities, always a good bet. RV parks, always a good bet. Single family homes, always a good bet. Those types of things are going to have a need, because even if people are losing their $1 million house, they might be moving into $250,000 rental because their credit's so screwed that they can't buy anything. So what you need to do is look at an investment, and what I do, I guess you can do whatever you want, but what I do when I'm looking at the markets is I'm constantly looking at, if something were to happen, am I over leveraged? Am I holding on to assets for too long? Am I not turning them over quick enough? Am I not liquidating? Am I not pulling the parachute? I just try to be really aware of what people are doing by just paying attention, talking to real estate agents, seeing how sales are going. Honestly, these days you can just look on social media. If you follow real estate agents, they'll tell you how things are going. I have quite a few real estate agents that are hustling, selling lots of stuff, leasing lots of stuff, commercial properties popping, lots of lease space. And you know, the best and safest way to invest in real estate is real easy. It's buy and hold with cash flow. I mean, flipping is great, and it's not super risky if you're smart about it and you know get qualified people to work with, and you build up your team and you know what you're doing there. It's not super risky. It's minimally risky. It gets risky when you jump into stuff without knowing what you're doing, without getting the right team built, without getting any kind of help. That's where it becomes real risky. The last thing I'll say about the markets and what I think's happening is that I think that you need to, if you're going to be an investor in real estate, you need to look at what it is. If you have solid anchors for like medical supply and doctors' offices and blood banks, those are going to survive any kind of economy. But if if you have a strip center and you have nothing but like a bar that bars go, they usually don't last that long. You have like this bar in one, and then you have a party store in another, and you have a nail salon in another. You got to look at, have you diversified? Have you anchored? Have you secured your real estate? Get a 30-year fixed conventional loan. That's really safe, because whatever your payment is, your payment is. You can do economy to scale or whatever, but you can make sure that you have the funds that you need in cash flowing to at least cover the mortgage, taxes, insurance, and deferred maintenance. If you have enough money to cover those things and you've diversified your portfolio, then you should be very, very safe and secure in real estate investments. Is when people get greedy, start not taking care of their deferred maintenance, property starts to fall apart, want to pocket that money. Those types of things really can get people in trouble. But other than that, if you're not greedy and you're determined to make things be profitable, I'd say almost everybody can leverage whatever situation the market's in. If everything goes to hell in a handbasket, well, guess what? That's great, because then you can figure out how to buy properties that are going to be selling for way less now than they were 6 months, a year ago. That's the low part, in investments. You buy low, sell high, right? So you're not going to be able to sell as high, but you're going to be able to buy lower. So the scale just slides a little bit, right? So you were buying low, selling high. Well, now you can't sell as high, and that slid over, but the buying low slid over also. So you still should, be able to make the money. As like I said, as long as you're not greedy, as long as you don't over leverage yourself, as long as you're not trying to take advantage, trying to say, oh, well, the system is letting me do this, so I'm going to do it. Well, the system will let you screw yourself, and the system's not responsible for you getting screwed if you did it to yourself. So my suggestion is pay attention to the market. Don't over leverage yourself. Make sure that if you buy things, that you're not doing short term with arms and all that kind of stuff. Do 30 years, especially if it's a buy and hold property. Do 30-year, do conventional, and buy right, and then you don't have to stress out about it, because if your mortgages, all your mortgages are $3,000, and you can rent them all out for $5,000. You get $2,000 positive cash flow. If one of them goes empty, you can cover the other. That kind of thing, and really diversifying yourself and setting yourself up right is so important before you start to really reap the rewards. It is a lot of work. It is a lot of setting things up. It is a lot of accommodating for the unknown. As long as you do those things, though, and as long as you're worried about those things, and you really give them the time and attention to educate yourself about those things, then the better off you're going to be. And what I mean by that is the well-educated person who's stressed out and worried about the money being spent, the money being taken in, that person who's worried about interest rates and payments, balloon payments, the person that has those stresses in mind are going to be the people that ultimately wind up only doing the deals that really do make the most sense in whatever the economy is. So as long as you're buying those deals that are only making sense in every economy, then you should be fine in every economy. Like I said, it's just a sliding scale. Instead of selling for as much, you're buying it for even less. So just keep that in mind. Be smart no matter what the economy is doing, because you never know. Things change not super rapidly, but rapidly enough that you could find yourself in a 90-day to payment situation, and they say they're not going to refi because of what the market's doing. So just like I said, this shouldn't be a gamble. It's a calculation. It's based on figures and numbers and facts. As long as you can, bring together those numbers, those figures and facts, and you will be prevented from losing out big. You'll be just winning big for the next 30 years. You got the same payment every month, same income coming in. Maybe increases a little bit over time. Take care of your deferred maintenance. Worst case scenario, 30 years from now, you own a property outright. And you don't have that mortgage payment, but you still are going to have taxes and insurance until you die. So keep that in mind. And deferred maintenance too. It's going to keep falling apart. Anyway, if you have any more questions on this topic, I like to keep my videos somewhat short. This is a longer one. But that's my thoughts on the market. If you have any more specific questions, feel free to reach out to me, thevalhallaventures.com. That's TheValhallaVentures.com, or reguideservice.com, reiguideservice.com. And I will be happy to get back to you. My email, my phone number, all my contacts in there, so you'll be able to reach out and we can talk about your specific situation. Anyway, my name is Jeff. I hope you have a great day. Hope you got something out of this, and we'll talk to you soon. Bye.